Okay, good day everyone. I hope everybody is good. So, welcome to the final part of the module 1 of this training, right? Um we've discussed quite a lot of concepts already. We've talked about support and resistance, told you how to use your rectangle tool to plot out your support and resistance levels, or rather support and resistance zones, right? We went ahead, discussed about trend lines, how to identify an uptrend, how to identify a downtrend, and then how to identify a sideways trend, right? We discussed all of that in the last class, in the last training, or the last video, right? So today we're basically going to kick off with something important to follow up with the trend line video, right? Which is price action. The purpose behind price action is to basically be able to look at the charts and properly identify what direction or what trend the chart is going on at a particular point in time. Are we together? So once we're done with price action, once we discuss price action, we'll go ahead and discuss a concept called candlestick patterns, right? I'm going to be showing you different types of candlestick patterns that we use, right? And then I'm going to tell you what they do, how to identify them, and all of that. So after that, once we're done with candlestick patterns, we are going to move on to chart patterns. Are we together? We're going to move on to chart patterns. We're going to see how chart patterns can form, right? How to trade chart patterns, right? How to see it form, how to identify it, and how to trade it correctly. Are we together? Because it's one thing to see it, it's one thing to identify it, and it's one thing to actually know how to trade it. All right. So that is all of the things we're going to be discussing in this concluding part of the module 1, right? So let's just start, sit back, relax, and get your notes, get your pen and paper, and make sure you jot things down. Are we together? So we're going to start with price action, like that, like I said. So what is the essence behind this price action of a thing? Like I said, it is to be able to identify the trend at which a market is going at a particular point in time. Are we together? So I'm going to use the Euro USD chart, right? And then we are currently on the daily time frame, as you can see over here, right? Um, so at this point in time, we can see that this is where the market is currently, right? So if anybody looks at this chart now, judging with everything I said before on the trendline video, right, it is easy to say that, in fact, a 2-year-old child would easily identify and say this market is going upway, is going to the upside. Are we together? Why is it going to the upside? Basically, you can see it. It is right in front of our faces, staring at us, because we have series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and we're on the way to form another higher high. Let me get this out of the way. Good. And we are on the way to form another higher high, and then we just keep going and all of that, right? So I'm really not going to take a lot of time with price action here because we have a lot of things to discuss. And basically that's it. How to identify a trend. Look for the characteristics of the trend: higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and then just basically plot out your trend. As simple as that. Just plot out your trend. Yeah, trying to get some accuracy here. I don't want it too close to the market. Remember what I said? You don't want the trend lines too close to the market. You want it at the tip of the candles, right? If you look properly here, if you look closely here, this line is at the tip, and then the second line I took was this point, and this is also at the tip. So once I have the first 2 points at the tip, all I have to do is to just draw it out. So it doesn't matter if at this point it is not at the tip and all of that. It really doesn't matter, because the first two important places I picked are at the tip. So whatever the market is doing here is accurate. Unlike if I draw it close to the market like this, right? If I draw it close to the market like this, it will get to a point where, at this point where it's where this candlestick came out of the market, my mindset would have changed to something like, okay, the market is starting to reverse, the market is about to go on a downtrend and all of that. Whereas if I had drawn my trend line correctly, I would have seen that it is not something significant, right? I would have seen that that breakout was not something significant. It was just a fake out. I would get that to phase traders out of the market. And we're going to discuss all of these things when we come to market manipulation, how the big banks move the market so that we can lose money and then they can gain money. But then we have a strategy to go against that, right? So we know how to look out for breakouts, we know how to look out for fake outs and all of that. So stick around with the training. You are always going to learn that with me here. So um that's basically it. Now let me show you something interesting. In the midst of all of this uptrend, there are minor downtrends in the market, because remember, right, the market is not linear. If the market is going to go all the way up, it wouldn't just go all the way up. It is going to form an uptrend, downtrend, uptrend, downtrend. The uptrend, downtrend are series of higher highs, higher lows, higher highs, higher lows, right? Good. So at this point where it came and formed an higher high, it came back down to form an higher low. And note, if it is going to come back down to form an higher low, it is not just going to drop. It will not just drop. Are we together? It would go back to the down with series of waves, right? Series of waves that we can now pick and connect and say, okay, oh, this is also a downtrend. Are we together? This is also a downtrend. So let me pick another point. Let me pick another um what's it called? Another trend, so we get familiar with the price action thing. So yes, bef- currently the market is in an uptrend, but before it was in an uptrend, it was in a downtrend before. So now let's capture this movement with a trend line so we know exactly what is going on. And I'm going to show you guys something interesting here, so pay attention, right? So we have our first point here at the tip, obviously, and so to say, we have our second point here, right, at the tip, obviously. And all we do is just drag it down, make sure it's at the tip, and then drag it down, right? Good. Now let me show you something interesting here, guys. So this could be our second point, right? But when it comes here, we really do not have proper interpretation for whatever is going on the market here. Because what am I going to say? It came out, it came back inside, came out again, came back. I really don't know how to interpret a market like this when it comes to this place. It is too messy. So instead of picking this point as my second point, I would rather pick this place. I'd rather pick this point as my second point so I can have reasonable interpretation for the market here. Now I can easily say something like it has been in a downtrend, lower lows, lower highs, right? Lower lows, lower highs, lower lows, lower highs, lower low, and then broke out, right? And began to form an uptrend. So that's basically it. So there's really no perfect way of doing these things. So I was telling someone yesterday, all of these things, when you read it on your textbook, when you read it in a PDF, or when you hear someone says it, it sounds textbook-ish, right? But when it comes to the market, it really isn't as it is when it is in textbook, right? It is always quite different. Do you understand? So you just have to know how to work your way around it, how to look for the best reasonable points that would, okay, that would align with whatever it is you have learnt. Are we together? I hope someone is following me here. I hope I'm not just saying things that you don't understand. Well, if I'm saying anything you don't understand, we always have the group. You can always reach out to me. I'm more than happy to explain further. Are we together? So that's basically it about price action and trend lines and all of that. We know how to draw our trend lines. Let me check if there is any other Okay, so this has been an uptrend. Before it was on a downtrend, it was in an uptrend. So if I'm going to draw my uptrend, and how do I know it was in an uptrend, right? It has been giving me series of higher highs, higher lows, higher highs, higher lows, higher lows. And so to connect, to pick, to identify it, I'll just have to the first point, the second point, and just drag it out. Are we together? Make sure it's not too close to the market, and that's it, basically, right? Let me see if there's any other example I can use here. I just want to give you guys as much example as possible so you understand these things and then you are able to do them by yourself, right? So this is an uptrend and this is how to draw your trend line, right? Good. Okay, good. This was a downtrend and this is how I'll draw my trend line, right? This was a downtrend. Good. That's fair enough, right? And so it just keeps going like that, just keeps going like that. So I would like to implore you guys, always practice. Once you are done watching this video, go to another pair, try doing this again and all of that. And then you see that with time you just get better at it, and all of that. Are we together? So that is that about price action, higher highs, higher lows, how to identify a trend and all of that. Trust me, we are going to be making use of this more often than not, right? So moving on, I said I was going to discuss what's next. Candlestick patterns, right? So let me get rid of all of these trend lines because I'm really not using it. So one more thing, yeah, when it comes to price action, one more thing. All of these trends I drew at the back here is really not useful, right? I just drew it just for explanation, just for the sake of explaining. Are we together? I really don't need it. The only trends I need on the market currently is this trend line, right? Because it is the only one that is able to tell me a little bit about past and I'm able to draw it into the future, which is here. Are we together? It's the only one giving me information about what is going on in the market currently. So if at any point the market decides to come out of this trend line, I know there is trouble and then I know to start looking for sales instead of looking for buys, right? So when it comes to candlestick formations, right, I have a PDF here that explains, that talks about candlestick formations and how to use it and all of that. So quick disclaimer, this PDF is not mine. This PDF is for a company called Western Sahara Forex Academy, right? So I'd like to acknowledge them just for the sake of copyright infringements, right? Want to acknowledge them, want to tell them thank you for the good work they did into this PDF, and thank you to Dr. Willis himself, which was my mentor or is my mentor, person that taught me Forex and all of that. I want to thank him also for releasing this PDF to us because, literally changed life and all of that. So, yes, for coming back to us, one of the reasons why I didn't drop this PDF in the group was because, so yes, this PDF is really good and all of that, but then the reason why I'm here is to shorten your learning curve, right? I don't want to bore you guys with a lot of information. Not like the information is not correct, it is just a lot and it gets tiring. So I am here to give you the ones that are most important, right? I'm here to give you the candlesticks formations and information basically that are most important. Just all you need to do is to just take time, digest it, and then use it for yourself in turn, right? So out of all of the candlestick formations we have, right, we have a lot of them, right? Hold on for me, guys. What's going on here? Okay, get rid of this. So um out of all of the candlestick formations that we have quite a few that are very important and we do not want to neglect them, right? So when it comes to candlestick formations, it is an important tool to take note of, right? Candlestick formations are very important to take note of, but they are not the basis to take note of. I'll take that again and I'll explain properly. I mean, yes, you have a candlestick formation that says buy, right? Every time you see a candlestick formation that says buy, you do not have to take that buy. And I'll explain even further, right? Not all of the times are candlestick formations reliable. Sometimes you see a candlestick formation and then it works in your favor. Sometimes it doesn't work in your favor. That is why we have a lot of tools, right? That is why we discussed trend support and sorry for that. That is why we discussed support and resistance. That is why we discussed trend line. That is why we are discussing chart patterns. That is why we are discussing candlestick formations. That is why we are going to discuss Fibonacci trading. So when you see one of these tools that says you should buy, it is not enough to just buy and invest your money until when you see more than three reasons to buy. That is, your support and resistance says you should buy, your trend line says you should buy, your Fibonacci says you should buy, your candlestick formation says you should buy, chart pattern says you should buy. When you have multiple things coming together giving you confluence, are we together? Giving you confluence that okay, oh, it is time, then it is time. But because I say okay, bullish engulfing candlestick, once you see a bullish engulfing candlestick, you buy, and then you just randomly see it somewhere and then you buy, my brother, you are going to lose your money, right? You need a confirmation of more than 2 to 3 tools coming together, giving you the same story. When we are analyzing, we are cooking up a story, and then once the tools that we are using to analyze, once they start to say the same story, then we know we are in a safe place. We can actually invest and put our money into it. Are we together? Good. So one of the important candlesticks to take note of is the bullish engulfing candlestick, right? And what does this bullish engulfing candlestick, how does it look like? As you can see, the candlestick, we have two candlesticks covered in circled in this ellipse tool, right? And then we have a bearish candle and we have a bullish candle. Note the bearish are the black and then the bullish are the white. If you remember the last class, I told you about how to change the colors and all of that. You get the point, right? So when you have a bearish candle and followed up with a bullish candle, now the bullish candle, take note, it has to be bigger than the bearish candle, right? That is when it is a bullish engulfing. And then for a bearish engulfing candlestick, right, we have the bullish candlestick, which is small in size, and then we have a bearish engulfing candlestick. As the word says, engulf, right? Bearish engulf. The bearish candlestick engulfs the bullish candlestick. The bullish candlestick engulfs the bearish candlestick. Do you get the point? Now, moving on, we have another candlestick formation, which is the tweezer top, and then we have the tweezer bottom. I really don't make use of that. I really don't see it as important, right? But sometimes it might be important, whatever the case may be. When it comes to triple candlestick formations, we have the morning star, right? That is, we have a bearish candle, we have a small candle in the middle, and then we have a bullish candle right afterwards, right? Same for the evening star, we have a bullish candle, we have a small doji candle in the middle, and then we have a bearish candle right afterwards. So basically, I think that's it. Remember, I said I am here to cut all of the too much information. I'm here to reduce all of the informations for you, right? I am here to give you exactly what you need. Exactly what you need. I am not going to bore you guys here. Are we together? Good. So that's basically all of the candlestick formations I look out for. I'm not even going to lie to you. I look out for bullish engulfing, look out for bearish engulfing, look out for morning stars, look out for evening stars. Basically, that's it. Basically, that's it. Because remember, all of these things are really not reliable until I have confluence from every other tool, right? So the reason why I'm just showing you this, guys, the reason why I'm showing you the reason why I am showing you guys this is just for righteousness sake, so you are aware of it, right? Really, we need much more tools coming together to give us a story before we know it is safe to enter the market and all of that. So now that we've identified bullish engulfing, bearish engulfing, morning star, evening star, I would like to go into the market and show you guys a couple of times where it's formed and then it was successful, and a couple of times where it formed and it failed. So you know that until confluence is in play, it is not worthy, it is not strong enough, it is not a strong signal. Are we together? Good. So let me go back to my charts and let me start looking for confluence sorry, let me start looking for candlestick formations. I think I saw one here. Good. This is a very good one. This is a very good one. So whether you like it or not, this is a candlestick formation, right? This is a candlestick formation. We have a bullish candlestick, and then right afterwards we have a bearish candlestick, which is the red. We had the green, and then we had the red, right? Which signifies that the market is about to change in trend. It was bullish before, it is about to go bearish and all of that. And then notice it actually was successful. If I had entered the market somewhere around here, my stop loss over here, I would have made a lot of money and all of that, took it to the downside and all of that, right? So we can see that here it actually worked. Are we together? It actually worked here. And let me come here and show you guys another example. This is an example of the evening star, right? So remember I told you everything is not going to be textbook like. The way it was in the PDF is not how it's always going to be in the market, but then it is always looking like it. You just have to use your common sense to carry it and say, okay, this is most likely. Do you get? It's always not going to be exactly how it was in the PDF. So for this point, if you notice, we had a green candle, we had a lot of middle candles, middle small candles, and then we had a bearish candle afterwards, right? This is an evening star, whether you like it or not. This is an evening star. And after the evening star, what happened? The market started to go bearish, right? So now take note. If I go to the monthly time frame, you will notice that all of this happened, right? All of this happened when the market hit major support zone. The only reason why this market truly got here and reversed was because it hit a support zone, right? Similarly here, it came to this support zone. All of this was just a fake out, right? It came to this support zone and then started to roll back to the ground. Are we together? Good. So let me show you an example of where it failed, right? So if you remember, we had now for this place we have a bullish candle, right? And then we have a bearish candle, right? Good. So obviously, shebi, since we say once we see things like this, it's supposed to fall, it's supposed to go to the ground, right? What happened here? Why didn't it go to the ground? It is because there is no confluence. Are we together? There is no confluence. Okay, yes, candlestick says we should sell. What else is telling me to sell here? Nothing. Nothing is telling me to sell here. I have no reason to sell here. That's why I say only candlestick formations would not get you anywhere. Are we together? But you just need to know it, just to add confluence to whatever story it is you are cooking up when you are analyzing. Are we together? You just need to know it. So basically that's it. Is there any other, because I really don't want this video to be too long, right? So notice we hit support here, and then we had a green candle, a red candle, and started going all the way to the downside. Similarly here, we had a green candle, a red candle. Almost, if I adjust this right, if I adjust my support zone right, it is supposed to be here. So we hit the support zone and then started going down because we had the candlestick formation already. But all of the time, it doesn't work all of the time. Like the example I showed you here, sometimes when you don't have confluence alongside with it, it would fail you. It would fail you. Are we together? So you always need to watch out for confluence and all of that. I think I've done justice to candlestick formations. I don't plan on staying too long on that because, yeah, I think I've done justice on that. So, the let me see what I have here. The next thing I'd like to talk about is chart patterns here. Chart patterns. Don't worry, guys. All of these things we are just giving you. I'm just so the module one, yes, was just to give you guys tools that you need to armor yourself with in order to go into the market, right? When you see a soldier has grenades, a soldier has shotguns, a soldier has helmets, a soldier has AK-47 and all of that. All of these are tools that they need in order to go into the market, right? Having the tool is one thing, right? Knowing how to use those tools is another thing. So what we are doing is I'm giving you the tools now. Module 2, where we start talking about key levels, Fibonacci trading, multiple time frame analysis. Now I start telling you how to use it, how to use those tools and all of that. So yes, that's basically it. Let me show you guys some chart patterns so we can conclude this video. So just go to page 50. Once again, thank you to Dapo Willis for giving us this, for allowing us use this material. Yeah, so good. Um, so like I said before, we have a lot of information here, but I come here to give you guys exactly what you need. I don't want to bore you guys with. Good. So we have a list of chart patterns here, right? We have the double top, we have the double bottom, we have the head and shoulder, we have the inverse head and shoulder, right? We have the rising, falling wedge, bullish, rectangle, bearish pennant, triangles. All of this, yes, they are important, but not as important as when you see things like this, right? When we have the double top, double bottom, head and shoulder, inverse head and shoulder, right? So now let me show you how you can spot a double top chart pattern formation, right? So this is basically a double top, right? When you have the markets going all the way to the top, are we together? You have the markets going all the way to the top, and then you hit some sort of resistance at the top, right? And then market starts coming back down and then tries going back to the top and then hits resistance at the same point where it hit resistance at the first time and then starts to reverse, then it is said to say you have a double top formation. Are we together? It is safe to say we have a double top formation at this point. So um now we know how it forms, right? We know how to identify it. Anytime you see two tops equally at the same level, that is when you know you have a double top formation, right? So once you see a formation like this, there is always going to be a neckline, right? The point at which it reversed the first time is your neckline. So when it comes all the way back to that point at which it reversed, right, and it breaks it, that is the only time you are allowed to enter this market or allowed to trade this chart pattern. Are we together? Excuse me, guys. Okay, good. Good. So that is the only time you have the right to enter this market and then start selling, however the case may be. Let's go to an example where we have the double bottom. Okay, good. Look at the example I was saying here, right? We have the first touch, we have the second touch, then we have the neckline. The minute price goes below the neckline is the point at which you want to start selling. Are we together? So inversely, we have the double bottom, right? Oh, quite funny. Anyways, to identify the double bottom chart pattern, right? We have a first point, we have the market coming all the way from the top, hitting the first resistance, going up a bit, coming back down, hitting the resistance the second time, right? And then starts to go all the way back to the top. And then once it starts going all the way back to the top, notice we have our neckline, right? We have our neckline, and then the point at which the market breaks the neckline is the point at which you want to enter, right? When we get to things like entry and exits, I'll start to explain to you how to enter the market and all of that. But then the only time at which you want to start looking to enter the market, right, is when the market breaks the neckline. Are we together? Good. And we can see a real life example here. This was a real life example here where the market came to this resistance point, came down, came back up. That is our double bottom, double top formation, right? And then we have our neckline here. And then notice whoever decided to take this trade would have to wait for the neckline to break before taking the trade. And then as you can see, 1,500 pip drop, right? Good. So the next chart pattern we want to talk about is the head and shoulder chart pattern. The head and shoulder chart pattern. So unlike the double top and double bottom where we have just 2 points, when it comes to the head and shoulder, we have 3 points, right? We have a head, basically like the word says, we have a head and we have 2 shoulders, like an human being. We have a head and we have 2 shoulders. Anytime we start to see formations like this, it is known as the head and shoulder pattern, right? When the market starts going up, reverses, goes higher, looking like it wants to continue the trend. Are we together? Pay attention, guys. This is an uptrend trying to turn to a downtrend, right? We have the market going all the way to the top. We have our higher high. We have a higher low. We have an higher high, right? It is expected for us to come and form a higher low, but instead he decides to form higher high. He decides to form our higher low, and then instead of coming back to form another higher high, he decides to give us another shoulder. I'll take that again, right? We have the market in an uptrend, as you can see here, right? Forming a higher high, higher low, higher high, higher low. Instead of it to come and form another higher high somewhere around here, it came to the same level at which the former higher high was. Sorry, the first higher high was, right? So now it is safe to say we have a head, right? This is the head, and we have 2 shoulders, right? And obviously we have our neckline somewhere around there. In fact, I like this example because normally some textbook we draw our neckline straight like this, but then like I said, it is not always textbook like. Are we together? That is why they showed us another type of way you can see it. It's not always going to be perfect like how it is in the textbook and all of that. And then let me go down and see how you decide to enter this market. Obviously, at the break of the neckline, obviously you can see the neckline. As you can see, the break of the trend line, and kaboom, price dropped. Exactly. Are we together? Good. So okay, now I would like to talk about the inverse head and shoulder pattern, right? We've talked about the head and shoulder that is from uptrend to downtrend. It's the same is the case when we have from downtrend to uptrend, right? The market will not just reverse, it will show you sign. Is either it shows you a bearish, is either it shows you candlestick patterns coupled with chart patterns, coupled with support and resistance, coupled with trend line. Are we together? You see the way all of these things are starting to come together, starting to look interesting. It is a story we are writing here, guys. So as you can see, we have a downtrend that is forming lower lows. Are we together? A lower low, a lower high, a lower low, a lower high, right? Instead of it to come and form a lower low somewhere around here, it decides to stop here, the same level at this former shoulder, right? This is now an inverse head and shoulder pattern. This is what I would call an inverse head and shoulder pattern, guys. Hold on, let me get my charger, guys. I don't want my phone to die. Hold on, guys. I'm so sorry. Um, Good. So I'm back, guys. So instead of us to come all the way here to form a lower low, we have to stop somewhere around here and then give us a shoulder, and then now we have an inverse head and shoulder. And like always, don't get confused by this is always not going to be the case, but although sometimes it's going to be the case where you have a simple head and shoulder pattern like this, but most of the times it's not going to be like this. And I'm going to show you examples in the chart, right? Good. So obviously we have the break of the trend, we have the break of the neckline, and then that is when price decides to shoot up. Are we together? So we've covered the four most important chart patterns that we have. Let's just breeze through. Let's just breeze through the remaining chart patterns that we have, like the rising wedge. All of these things really not important, because when we get to multiple time frame analysis, you start to see these things, you start to see it more clearly, and then you don't need to start cramming, is this a rising wedge, is this a symmetric triangle? You don't need to. The only thing you need to know: double top, double bottom, head and shoulder, inverse head and shoulder. All of this rest, they are basically normal price action movement that happens. Like normally the market is in a downtrend. Are we together? Look at it and follow me here, guys. The market is in a downtrend. It decides to form a higher, sorry, this was a lower low, decides to form a lower high. Are we together? And then at the point where it is forming a lower high, that is what they call, what's the name they gave it here? Rising wedge. Exactly. Are we together? Whereas it is just normal price action movement that is going on here, but it is still supposed to be taking note of. Are we together? So we have all of these things. Low downtrend, decides to break out of it and then goes up. All of these things is what we discussed with trend lines and all of that. So yeah, basically that's it, guys. I really don't pay attention to. So this is the thing, I like to stick with the very simple things. Are we together? I don't want to put too much things in my head. Same thing, same way I don't want to put too much things in you guys' head. Do you get? So you guys don't get tired of the whole thing and all of that. Are we together? So yes, let me see what else do we need to discuss about all of this. Okay, this is our what's it called, sideways trend, where the market is not going up, it's not going down, it just keeps moving sideways. Yeah, basically that's it. So now let's move to the chart and see if you can have some examples like this. So I cooked one example here specifically. I cooked one example here specifically. In fact, there are two examples here, and I'm excited to show you guys. So like I said, yes, we had a downtrend here. We had the market forming series of lower lows, lower highs, lower lows, lower highs, right? And then form this lower low, and then decide to form a lower high. And then we are expecting for it to come back here and form a lower low, even lower than this former low. But then it decides to do what? Stay at the same level. Are we together? It decides to what's this tool? I'm supposed to use this tool to explain so you guys get the gist properly. Is it this? Yes, ellipse. Good. So decides to come here and then stay at the same level of the former shoulder, and this is, why is this tool not working? Okay, what's going on? Okay, anyways, I don't know why it's not working. Maybe probably because of the network. So let me just, I hope this works. What's up with network? Oh, God, I beg. I need to explain this properly. Let me take it again. Let me take it again. Omo, God, I beg. God, I beg. Network. Ah, eh. Uh, that's the problem we face. in places like this. God help us with network. Ah, okay. Okay, so I'm going to end the video here, right? I'm going to end the video here, and I'm going to have to make another video. So yeah, I think we've discussed quite a lot already. We've discussed um, price action, candlestick formations, and we've discussed a little bit of chart patterns, right? So I'm going to stop here, and in the next class, in the next training, we're going to continue from here, right? I would have loved to show you guys, because normally this is an head and shoulder, this is another head and shoulder. I was going to show you guys a couple of double top formations and double bottom formations and all of that, but network said no. And yeah, so watch this video, guys, and practice, try and identify these chart patterns yourself, and before the next video we'll continue. By the next video we'll continue from here, guys. Take care of yourself. Bye, guys. Peace.